Hooty-hoo, all my stock market gamblers. Welcome today. Today's Monday, holiday, President's Day. Markets are closed. I'm very sad, but I have some time, so I thought I'd come and talk with you a little bit. Let's first start with the markets. The markets have pulled back last week, and I think we're going to retest those January lows. We're coming down, and the January lows are going to be retested. I actually think we're going to get a little bit below the January low in the NASDAQ, in the S&P. But I do think that is a buying opportunity. I think as soon as we come down and test those lows, we're going to head higher. And I do even think we're going to get to a new record high before we have the market crash later in the year. But I would wait. It might take another week or two to play out before we retest the January low. I think once we get below that, start nibbling, start buying. That's what I'll be doing. I'll be going long. I'll be buying some calls on the SPY, calls on the QQQ. And there's no exact point. You get down close to that low, that might be the time to start putting some money into play. Now, what I want to clear up and talk a little bit more about is the real estate market. Now, a lot of people, I get a lot of pushback when I say real estate's going to soon be having a half off sale. Look, I know there's a lot of YouTubers that say real estate's going to go up another 20% this year. Heck, Zillow says it's going up 23% this year. It's going to go higher, That's what they're all saying. I do not agree. And the start is already happening. The start is in new home sales. New home sales are already, the prices are already come down 10% just in the last couple of months. But here's why. Here's what I want to talk about. Now, look at the comments were fabulous, and my opinion may not be right. I may get this completely wrong. Look, at some people said that, look, Mike, people need a place to live. The real estate market's never going to crash. They said in my area, people are coming in with all cash offers and buying houses up. They said that corporations are going to be buying so they could never collapse. And all of this is true. All of this is correct. Right now, we are having a big run up in houses. Do we think it's going to continue 20% a year into infinity and beyond? I personally do not. I do not. Now, I am a real estate broker. I am also an economist. I have a degree in economics, and I'm also an old guy, so I know what inflation is. Look, if you're under the age of 50, you've never seen inflation, right? Now, people say, well, Mike, inflation's good. It's going to make the house market go up. What they don't understand is that housing is actually a debt asset. Most people buy the house with debt. They don't come in and pay all cash. Now, some people do. About 30% of homes are owned outright, but the rest have mortgages on them. 70% of homes have mortgages on them. Now, when homes prices come down, where are people going to live? They're going to live exactly where they're at now. They're going to live in their houses now. Their house is going to be worthless. It's not going to be the ATM that they can take money out of. They can't continue to pull money out of their ATM, which is their house. And that's what they're doing right now. Look, in the last year, I'll be the first to admit, rents are up 20% year over year. House prices in most areas are up 20% year over year. In most areas, houses are still selling. They're still strong. But look at, now inflation. Inflation actually does not help the housing market. It does not make the houses go up. Here's why. Okay, look, if you have to pay more money for gas, you have to pay more money for food. Do you have more or less money left over to buy the house, to go to the mortgage payment? You have less money, so it's harder to afford a home, harder to afford the high prices. Now, what else does inflation do? Well, it raises interest rates. The Fed says they're going to fight inflation by raising interest rates. Now, that could happen, it may not happen, but usually interest rates go up when inflation goes up. Now, what does this do to houses? This brings the prices down. Look, there's a general rule of thumb, and it's not completely accurate, but for every 1% that your mortgage goes up, the house will come down about 10%. Now, mortgages are creeping up to 4% right now, and I think they're going to hit 5 or 6% as the Federal Reserve raises rates. Now, let's talk about the Federal Reserve for a minute. The Federal Reserve is actually what's caused this bubble in housing. Some people would say we're not in a bubble. I will be very I would argue that point. Look, we were in a bubble in 2008 and you saw the market come down, right? Okay, we're in a much bigger bubble now because prices are above what they were in 2008. So we're actually at a higher price now. Now the Federal Reserve, okay, they're going to do three things. Now they're liars, I know, but this is what they're telling us they're going to do. And they will lie to you. They will not tell you the truth, but they say they're going to taper, meaning they're going to stop all purchases of mortgages by March. March is next month, right? Okay, so they're going to stop buying mortgages. Okay, what's that going to do to the mortgage interest rates? Going to make it go up. Okay, what else are they going to do? They're going to be selling mortgages, the ones they have on their account right now. They're going to be selling the mortgages. So what's that going to do? Well, that's going to take away some of the money for mortgages, and it's going to make the cost of mortgages to get a mortgage also go up once again. Okay, so what's the third thing the Federal Reserve is going to do? Well, they're going to raise interest rates. That's right, they're going to raise interest rates. Well, that's what they're telling us. They're telling us. Some people think they're going to raise 7 times just this year. Now, let's say they raise 7 times this year. They're going to get rates up to, let's call it maybe 2%. But the thing is, on mortgages, that will push mortgages up to about 6%. What will that do? It will lower the house prices about 10 or 20% this year. Okay, that's just what the Federal Reserve says they're going to do. They are liars, and I'll be the first to admit that. But the Federal Reserve, now, a lot of people should be angry about this, especially if you want to buy a house. The Federal Reserve is the one causing this inflation, causing this run-up in the house prices, causing this huge bubble we have in the housing market. Well, how do they cause this bubble? Well, they do it by they give corporations money at close to 0%, definitely less than 1%. Companies like Blackstone, like Invitation Homes, they just bought 1,500 homes. Average price of those homes, they paid $474,000. They spent $656 million. Now, where do they get the money from? Well, they get the money from the Federal Reserve, and they pay close to 0% for that. Now, I don't think it's a level playing field. Look, if they had to pay the 4% mortgage that me and you have to pay, they would not be out buying these homes. They would not, because they can't make money at 4%. Because 4%, they have to pay an extra, let's call it 1% in property taxes. That's like 5%, right? Okay. And then they have to rent them out to you. See, these corporations, what they're doing is they're getting money for free from the Federal Reserve. 0% interest rate. Some pay 0.5%, some pay 1%. Companies like Blackstone, they just spent $5.3 billion with the B dollars to buy 12,000 apartment units. Why? Because they get the money for free and they just want to make 4 or 5% on the money. Look, I don't think corporations should be allowed to buy homes. I really don't. I think you could stop this. You could pass a law saying that corporations cannot buy homes. Corporations don't need to buying thousands and thousands of homes and then renting them back to you and making all this money. It's just taking money from you, putting it in the corporation's pocket. That's what it's doing. That's all it's doing. It's a transfer of wealth from the working person to the corporate person. Get the corporations out of it. Here's another way you could do it. Okay, let's say a corporation buys a home. Well, if they're not an individual, let's charge them 10 times as much property tax as the individual. For example, $1 million home, okay, individual pays 1%, that pays about, well, $10,000 in property tax. Let's charge the corporation, let's charge them $100,000 in property tax. I bet that would stop them from buying all the homes up. Look, there's not a shortage of homes. There's plenty of homes out there. Look, you got the baby boomers that are retiring, they're moving into old folks' homes, they're selling these McMansions, and the McMansions are going to be for sale, and the millennials want to buy them. They just don't want to pay that price. Look, I can't blame the millennials. I wouldn't want to pay that price either because it is a bubble, and if they buy them now, they're just going to be losing money when it's the half-off sale. It's just that simple. Look, there's problems out there in the home market right now, and I'll be the first to admit that. And right now, it looks like a shortage, but there's really not a shortage. Yes, home prices are going up 20% a year right now, but that is changing. The market's changing, I'm telling you. Look, someone's one of the comments was, why would someone shift their 2% mortgage they have right now for the 4% one that where the mortgage market is. Well, they wouldn't. They would not. They would stay where they're at, but they can't sell it and go get another one. They have to stay there. So it takes that off the market. But here's the thing. Okay, look, they're not going to be the seller. They're going to be the one staying in the home. But when the person selling, there's no buyers, what has to happen? They have to lower the price, and that price will get lowered. The price will come down. You'll see it in new home sales right now. They can't get the homes sold. What do they have to do? They have to lower the price. So once you lower the price, the next person that wants to sell his home has to get below that. And then the next person that wants to sell his home has to get below that. It's chasing it down. Right now, we're chasing it up in many areas still. It's a bidding war out there. You can get bidding wars going where you're getting, 5, 10 people bidding on the same house, and they will just bid it up $100,000, $200,000 over the asking price. But you're going to get the same thing going the other way. When there's no buyers, the bidding war is then the people selling their home to get under the other one on the street. Look, if you got 5 houses for sale on the street, which one sells first if they're all identical? And a lot of tract homes are identical. Well, it's the one at the bottom, right? That's the one that sells first. So everybody's trying, it's a race to the bottom then. Look, at what this also is going to cause is a wave of foreclosures, a tsunami, if you will. Now, foreclosures have already picked up 100% year over year. That's a small number right now, but the number is going to start to get big, especially if prices start to drop. Foreclosures are just going to hit the market like you won't believe. The amount of inventory, we're going from no inventory to a whole bunch of inventory. It can happen overnight. Look, I'm an old guy. I used to be out there back in the 80s. I had 3 or 4 homes, and I got kind of over levered in the market. I had to sell 2 of these really quick. Well, I couldn't get them sold. One weekend, I could have sold it. And just like a month earlier, it happened so quick. It goes from all these buyers, I call them the herd, and the herd disappears to where there's no buyers. I had to lower that price. I had to get under the other house to get rid of my homes because they were crushing me because of the debt. Look, houses is a debt. It's a debt asset. Most people don't own their home free and clear. They don't own it outright. Now, if you do, that's great. It's a perfect thing, but it's still going to come down, relatively speaking. But if you don't have to sell it, doesn't matter. But it'll come down with the other houses. It just will. That's how it works. It's going up with the other houses right now, but that's how the housing market works. It's a stair step up, but it's an elevator down. You watch. Mark my words. I'm still calling for a 50% off. Now, this is going to take a year or two to play out. Look, it's not going to happen tomorrow. I understand, that in some areas, all cash offers are coming in and people are buying them up. But I'm telling you, things are changing. I used to do short sales, and I'm going to save the short sale story for another podcast, but short sales are coming. That just means that the banks are going to be underwater soon because they're loaning money out there at $1 million loans, $2 million loans, and pretty soon the house prices go under these, and the bank, they owe the bank $2 million on a home that's only worth $1.5 million, and you have to do short sales. Now, I'll explain all that in another video, but the banks say that people just handing the houses back to the banks back then, and that wasn't that long ago. That's 2008. It's going to happen again. It's going to happen much bigger than 2008 because the bubble has gotten much bigger. Now, I know this video went a little bit long, so get out there, enjoy your President Day holiday, and hit that thumbs up if you really liked it. We'll talk more hopefully later this week if I got some time. If not, we'll talk really soon. Bye-bye now.